Hey there, everybody. This is Greg Gossett from Gossett Trading and Mentoring. Today is Saturday, July 15th, 2023, and welcome to another edition of my Weekend Review podcast. In this podcast, I'll tell you the format. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the positions and all the trading that I did last week, both on the daily time frames, the weekly time frames, and the monthly time frames. Talk about when I entered the trade, what the signals were of why I entered the trade, and most importantly, how I am going to manage the trade going forward, either to the upside or to the downside. It's very important in trading that you have a plan, you have a process, you have if-then statements. If it does this, then I'm going to do that. If it does that, then I'm going to do this. We have no control of what the market's going to do, but we have to know exactly what we are going to do. And that's why it's important to have a good trading plan, a good process that incorporates good trading principles, position sizing correctly, having an emergency stop, so if things go the worst case scenario, you know exactly how much you're going to lose, and it's not going to be a large portion of your position. You're going to have an end of day stop, which most of the time you're going to hit. If you have a loss, keep those losses small. To the upside, if it starts moving your way, in my process, I take partial profits if it moves the value of 0.45 ATRs from the previous day's close. I like to take profits when the market gives them to me, but only a portion. Then having a trailing stop level. If it gets to a certain point, which for me is 1.5 ATRs above my entry price, then I go into what's called trailing stop mode. And then if we get into the 70 RSI area, if we get into the 65 RSI area, then I also have procedures and plans and a process of what to do there as well. So it's very important that you have a process. Like I said, you can't control what the market does, but you have to know exactly what you're going to do. And I'll show you that today on the positions that I have, what I'm doing and how I'm going to manage them going forward. After that, we're going to do just a few minutes on trader psychology. Always most important part of trading, the most important skill in trading actually is the ability to follow your plan and what's going on in between your two ears in your mind. And that really is a very important process of trading, is the trading psychology aspect of it. And so we'll spend a few minutes on that, and hopefully that will be helpful. It's always helpful for me to teach, and I hope it will be helpful for you as well. After that, I have gone down through my master watch list. I'm looking for potential trades next week, both on the daily and the weekly time frames. When we get to those areas, or I'm sorry, when we get to these potential trades, they're not going to be where they need to be yet. I look at these, I go down through the watch list, and I identify levels either higher or lower, and then it's important to be patient and wait for the price to get to those levels. If they get to those levels, then you potentially have a trade. If they don't get to those levels, well, then you just look for another market that it does get to those levels. It's very important to identify a level, especially on a weekend when it's quiet, and go, this makes sense. This level has a confluence combination of support or resistance if you're going short, and just let the trade come to you. Don't force it. Just let the trade come to that level. And then if it does come to that level, position size correctly, set your emergency stop, know where your end of day stop is, start taking partial profits if it starts moving your way. If it closes below, just get on out and wait for another trade to set up. It's really not that hard. And if you do need help with learning how to trade or creating a process, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I've taught people from all over the world, and I will teach you step by step all 5 of the different trading approaches that I have used. And I'll talk a little bit more about this at the end of the podcast if you're interested, but my email link is in the description of the YouTube description of this video, and so feel free to reach out to me. I'm completely booked up right now with my students, but doesn't mean that we cannot do some lessons in the future. And I think you'll be happy that you did take the class, because like I said, I've taught people from all over the world. They've all been very, very happy with the training and the teaching and the results. All right, so I'll go through the dailies. And I think I have 4 potential dailies for next week, and then we'll also go through the weeklies as well. And weekly trades, you take those on Fridays because that's the last day of the weekly bar. All right, so that's the plan. U.S. legal disclaimer, go through current trades, do a little bit on trader psychology, and then look for potential trades for next week that I'm waiting for those prices to get to those levels. So hope this is going to be helpful for you. Hope you're having a nice weekend. Hope you had a good trading week last week. And so let's get this U.S. legal disclaimer out of the way, and I'll be back in about 40 seconds. Thank you so much.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, here we go. Let's start with some of the daily swings that I had. Let's start with SLV. SLV is silver. I talked about this on the podcast prior to this signal happening. Signal, I bought down here on 623. Why did I buy it? Well, rejection of the 200-day moving average. This is the daily trade. Black line here is the 200-day moving average. During the day, it went under the 200, closed back above the 200. Now, when that happens, that's my entry signal. But how much do I buy? And here's the rule that I use. I hope this is helpful for you. It's a very good rule. What I do, let's just use a hypothetical $100,000 trading account. I take 1%. Of course, you can do 2% or 3% if you want to be more aggressive, but I think 1% works well for me. So if you have a $100,000 trading account, 1% of that is $1,000. You divide it by the value of the 2 ATR. This adds up the movement in the last 20 days, divides it, and that's where you get your number. So I divide that by 0.86 at the time. $1,000 divided by 0.86 would tell me to buy 1,160. I'd round up to 1,163 shares. Now, at that point, I'm going to place my emergency stop exactly 86 cents below. This is the red line. So in the worst case scenario, if the price moved back down, if I have, now whatever that 1,200 and whatever was, if it moves 86 cents, well, then that's $1,000. And if I ever get to my emergency stop, I don't wait till the end of the day. If it gets there, I get out. That's my loss. That's what I said my maximum allowed loss would be. Yeah, it's not fun to lose $1,000. It's not fun to lose 1% of your capital, but it's not going to blow up your account. Now that's your emergency stop. My end of day stop, well, why did I take the trade? Well, during the day I went under the 200, closed back over. So now I have the support of the 200 below. Also, in addition to that, I have the negative third ATR channel. This is this thicker gray line. 92% of prices tend to stop going down when they get to these levels and go sideways or go up. So that was a confluence of signal there. Got long, 2056, position size correctly, immediately placed my emergency stop 2 ATRs below. And then my end of day stop is the opposite of why I got in the trade. I got in the trade because it rejected the 200. Therefore, if it closes back below the 200, I'll just go ahead and get out of the trade. Okay. Orange line up here. This is my trailing stop level. This is 1 point, the value of 1.5 ATRs above my entry. If I get to this point, then I go into what's called trailing stop mode. If I get to trailing stop mode and then I have a close below a previous bar's low, I will exit half the position. And then I also told you that when I have movement my way in a trade, I take a partial position. So here we moved up the value of 0.45 ATRs. I took off 10%. Here we moved up, took more. Here, took more, and then of course here I've hit multiple trailing stop levels. So I've been reducing my position size as the market has been giving me the profits. Now, we are at a very interesting location at the moment. We're at a 67 RSI, 67.44. At this point, I'm looking for several things to happen. If we go up and reject the 70 RSI, then I will get out of half of the remaining shares that I have. After that, if I have a close below a previous bar's low after rejecting the 70 RSI, that's when I'm completely out of the trade. Also, we are above 65 RSI. We're at 67.44. If I ever get to 65 RSI, then if I close below the 5 EMA, this is the blue line here, then I'm also completely out of the trade because I don't want to let this beautiful trade turn into a loss, obviously, right? I'm in trailing stop mode, but silver's been so strong that I haven't had a close below a previous bar's low. So I know this all may sound like, God, Greg has a lot of rules. How could I ever keep this straight and so forth? But, if you do take my one-on-one course, I promise you, I will quiz you. We will do all sorts of simulations, many simulation trades where you have to tell me exactly what the rules are. You're driving, you're the one telling me, and if you're wrong, I'll correct you. If and hopefully you won't be wrong. If I've done my job teaching, you will know. But yes, there are a lot of rules, but they're really not that difficult. And like I said, you have to have these if then statements. So got to trailing stop level, have not had a close below previous bar's low since. This particular trade up a whopping on the shares remaining, up a whopping 9.98%. All right, Morgan Stanley. I did short Morgan Stanley back here on the 3rd of July. What was the signal? We had a rejection of the 200-day moving average. We went above it during the day, closed back below it at the end of the day. I position sized. My end-of-day stop is simply going to be a close above the 200. I placed my emergency stop 2 ATRs above. Then I place my trailing stop level 1.5 ATRs below. As it moves down, I take partial profits as always. So got short here, 86.52. Next day moved down, took some partial profits. Next day had a big move down, hit 2 partial profits, got to trailing stop level. Then here on the 11th, I had my first close above the previous bar's close. I locked in, I covered half of the position for a gain of 1.95%. And then next day moved up. I thought, oh, we're probably going to close above the 200, but closed below. Kept me in the trade. Next day, tested the 200, kept me in the trade. Next day, which was yesterday, Friday, gapped higher, and I thought, oh, I'm definitely going to have to get out of this, but closed lower. A lot of selling in this area. So the remaining shares that I have on Morgan Stanley up 0.85%. All right, those are the open daily closes. Now here are the dailies that are closed, by the way. I did get short SPY here on the 7th of July with this lower high V1 to the downside. Here's bar 1, bar 2 goes above, bar 1's high closes below bar 1's low. My stop is going to be a close above halfway of the washout bar. Of course, I have my emergency stop 2 ATRs above. I have my trailing stop below. Next day, closed a little higher, but did not close above the halfway bar. And then luckily, I got out of this trade for a small loss of 0.68% when it closed above halfway of the washout bar. Good thing I did because the market rocketed up after that. I had a lot of hope for this trade. There were a lot of signals here, but it just didn't work. And, not all trades are going to work. But the key is you have to keep your loss small. And I kept the loss small at 0.68%. So I'm out of that one. Lyft. LYFT. Shorted Lyft all the way back here on the 9th of June. V1 to the downside and a rejection of the 70 RSI. Got short at 10.59. Placed my emergency stop above. My end of day stop, close above halfway. Next day, attempted to close above, closed below. Attempted to close above, closed below. Then it moved down, took profits. Next day, attempted to close back above, closed below, so I kept it. Next day, down, took more profits. Next day down, took more profits. Next day down, took more profits. Got to trailing stop level. Then I have my first close above previous bar's high. Locked in half of the position for a gain of 3.21%. Moved sideways, had some down movement here, took more profits. down movement here, took more profits. And then on the remaining shares, which weren't many at that point, we finally closed above halfway the washout bar. On the remaining shares, but not the entire position, took a loss of 3.81%. But you can see I took off in profit, took off in profit, took half of what I had left here in profit, continued to take more in profit. So yes, on the remaining shares lost 3.81%, but at that point they were very small. And I did get out because it closed above halfway of the washout bar on the initial entry. All right, last daily trade that I took on Thursday, as a matter of fact, was VIX. I really like this setup. This one turned into a small loss. We had a double bottom here, bullish divergence, RSI divergence, ATR divergence. And then on Thursday, we went under the 30 RSI, closed above the 30 RSI, and we have a V1 entry. And by the way, I use V1s all the time, really part of the bread and butter of my trading. If you go to my YouTube channel, there's in the lessons playlist, there's a video called V1, V2 entries. It's totally free. Go watch it. I've had a lot of good feedback on that video, and it will explain to you what V1s and V2s are. But here was a V1, bar 1, bar 2 went below bar 1's low, closed above bar 1's high. In addition, we went under 30, over 30. And big picture, like I said, we have these MACD divergences, ATR divergences. I really like this setup. It didn't work though. It went under 30, over 30. I got long at 24.16 with the under 30, over 30. Next day, you can see it closed at 29.32. Took a 1% loss on this trade. But that's the key. When you untrigger the trade, just go ahead and get out, and took a very small loss of 1% on this trade. But next week, if we close back above the 30 RSI again, then I will definitely be considering taking another long position in VIX. All right, so those are the dailies. SLV open up 9.98%. Morgan Stanley remaining shares up 0.85%. SPY closed trade took a loss of 0.68%. Lyft took a loss of 3.81%. And the closed trade on VIX loss of 1%. All right, let's get to the weeklies. Boy, I have been talking about this trade for centuries. These are weekly bars now. I did get long IWM all the way back here at the lows of the market in October of 2014. Got long at 167.19. Position size, placed my emergency stop. My end of week stop is simply a close below the 300-week moving average. I placed my trailing stop level 1.5 ATRs above. We moved up, took profits, moved up, took profits, moved up, took profits. Got to trailing stop level. Here on this bar, we have our first close below the previous bar's low. Locked in half what I had remaining for a gain of 6.53%. Moved down. Then we had another big upswing in the market where I took many, many partial profits as it moved up. Then we came back down, tested that 300. You see how that 300 is holding and it's respecting that 300, never closed back below. Moved up, took profits. Of course, this week had a big week up profits as well. We are at a 59.11 RSI. If we get to a 65 RSI, then a close below the 5 EMA will completely get me out. Or if we reject the 70 RSI, if we keep going higher, then I will get out of half the position there as well, as I discussed just a little while ago. But the remaining shares on IWM up 12.73%. All right, next trade, XLF. Weekly trade as well. Bought XLF all the way back here March 24th with a bounce at the 250-week moving average. This is a deep dip buy. So I position sized. It also rejected the negative third ATR channel. So I position sized, placed my emergency stop 2 ATRs below, placed my trailing stop 1.5 ATRs above. My end of week stop would simply just be a close below this 250-week moving average. Moved up the next week, took profits. Next week, nothing. Moved up, took more profits. Got to trailing stop mode, consolidated, went back down, but did not close below a previous bar's low. And then back here on the 23rd of June, had the first close below the previous bar's low after reaching trailing stop level. Locked in half of the profits at 6.4%. This week had a nice week up again, took partial profits, and the remaining shares here on XLF up 10.36%. So really nice trade there. Last weekly trade, XLRE. Took XLRE here on a higher low V2. Here's a V2, bar 1, 2, and 3. 2 goes below bar 1's low. 3 closes above bar 1's close. Position size, place my emergency stop. End of day stop on a V2 is a close below halfway the washout bar. Halfway the washout bar here is 35.79. Moved up a little, came back down. Interesting point here though. See how we came back down and we held the halfway of that bar? Next week, tested it again and then moved up. Got to trailing stop this week in addition to taking some partial profits off. So this trade on this higher low V2 doing very well. Up 6.32%. One of my favorite setups of everything I trade are higher low V2s in the value zone. This is exactly what it was. So gain of 6.32%. And by the way, you know, in my one-on-one course, we spend hours and hours and hours on how to trade these V1s and V2s. And in some of the trades that I have coming up for next week, there's some potentials there as well. All right, so recap on the weeklies. Remaining shares on IWM up 12.73%. Remaining shares on Financial XLF up 10.36%. And then full position here, except for the partial profits, up 6.32% on XLE. All right, excuse me. All right, last trade on the monthlies. I also trade monthly bars. This has been a monster, everyone. This is Southwest Airlines. Take the trade at the end of the month and the end of the bar. Why did I take the trade? I took the trade with an intra-month rejection of the 200-week moving average. I got long 29.60. Placed my emergency stop 2 ATRs below. Where's my end of month stop? Well, I took it because it rejected the 200-week moving 200-month moving average. If it simply closes below the 200, I am out of there. But we have earnings here on the 27th of July. So regardless of what the chart is doing, regardless of what the price is doing, I will exit this position on love before earnings because I do not hold through earnings. After I bought it the next week, or next month went up nicely. Hit 2 profit targets, took off 20% of the trade. And then this month have already hit 1 profit target here as well, which is nice because it reversed. But yeah, this trade has been a monster. Up 18.95%. So, excuse me. So those are the trades. Not all winners, but as you can see, more winners than losers, and more importantly, the gains much larger than the losses. See, that's what you have to do. It's okay to have losses. You just have to keep them small. And ideally, on your winners, they're going to be much larger than your losses. And you can see from the trades that I just showed you that that is the case. All right, let's talk a little bit about trader psychology. This is from Anthony Crudelli over on Twitter. You can follow Anthony at Anthony Crudelli. Great trader, great teacher. As a new trader, I traded my best when my back was against the wall. But when things were going well, I'd lay off. Or in other words, he didn't trade as well. This is a poor mindset. I had to learn to be a taker when the market's giving and lay off when the market is taking. This is an integral. This is integral to go from a losing to a winning trader. So what he's talking about, when his back was against the wall, he was trading his best. He was following his plan the most. When things were going well, he probably was a little loosey-goosey, not quite trading his process exactly. Yes, of course, when things get tight, then you trade really the way you should. And when things are going great, maybe just you're not as disciplined. Well, what he's saying here is that regardless of whether you're winning or losing, your back's against the wall or not, your back is not against the wall, it's important that you trade exactly how you're supposed to trade, whether you're winning or losing. Same thing in poker. You know, when people are playing poker and they're running well, they probably make calls they shouldn't. They probably get out there and gunsling a little bit when they shouldn't. But if you're down, then you're playing really, really tight the way you should play all the time. That's what's important. And when you're down, following your rules to the T helps you stop being down and hopefully get you up. And it's the same thing with trading. So whether you're winning or you're losing, the the sum of this story and the moral of this story is whether you're winning or you're losing, follow your process precisely. That in the long run is going to get you the most money, and that's why we're doing this. So thank you, Anthony. Please follow Anthony over at Anthony Crudelli over on Twitter. All right. So as I mentioned, I have gone through my watch list on the dailies for next week. Let's take a look and see. Now, they're not buys now. They have to get to certain levels first before I will buy them. So it's a game of waiting and saying, look, if it does what it's supposed to do, if it gets to the level it's supposed to do, that's when I'm going to buy it. If not, I'll forget about it. I'll just trade another market. This is Carnival CCL. Carnival's had a huge run up, obviously. But what I'm looking for this week is a return to value V1 and V1 or V2. One of my favorite approaches. I teach this in my private one-on-one courses. But you see the green line here and the green line here? This is what's called the value zone. And big picture, you want to buy in value and sell above value. Look at this. Was this a good purchase here in the value zone? Yes, it certainly was. Was it a good purchase up here? Not at this point. But you see how the market has come back down into the value zone? Well, now it's a reasonable time to buy because we're in the value zone. Does that mean I'm just going to go in here and buy this sight unseen? No. What I'm looking for is what's called a return to value V1 or V2. We were clearly above value. Now we're back at least reasonably in value. But what I'm looking for is we've come into the value zone, but we kept going down on Friday. We may continue to come down tomorrow or Monday, excuse me. What I'm looking for is the price to stop moving down, start moving sideways, showing that there's an equal amount of buyers and sellers, and then look for a V1 or V2. So specifically next week, I'm looking for 2 days of sideways motion, or in other words, prices that don't go lower than Friday, at least 2 days. And then if we get a breakdown and reversal back up with the V1 or a V2, that is when I will consider taking this trade. But we were above value. We're now in value. Better place to buy here than here, right? You want to buy in value, sell above value. You don't want to buy in above value and sell at value, right? You want to buy in value, but I'm looking for the price to stabilize and then look for a V1 or V2 entry. And again, if you want to learn more about this in depth, just go to my YouTube channel, watch in the lessons playlist, watch the video on V1s and V2s. All right. Or alternatively, you can take my one-on-one course as well, and we go through that. And the other thing that I wanted to show you, look at this previous high here. That's resistance. And then here we broke through this resistance. Now this is support. So drawing this line out here, I'd really love to see CCL come back down because there should be some inherent support here as well, then move sideways and then look for a V1, V2. That would be a very good high probability, low risk trade. All right. So Carnival, 2 more days of sideways motion and then a V1 or a V2. I'll consider getting long Carnival. Merck. I didn't see this. I would have potentially taken this on Thursday. And it did react the way that I thought it would react. I just didn't notice it. You see the black line here, the upward sloping black line? That is the 200-day moving average. This would have been a legitimate signal here with the bounce at the 200. And I didn't take it, and it bounced up nicely on Friday. But what I would be looking for next week is it to come back and retest this 200, ideally giving me a little bit better risk to reward. You can see buying here, this is valid too, but see there's a lot of distance between here and the 200-day moving average. I would ideally like to see it like on Monday or Tuesday or whatever, go under the 200, test it again, and then close barely back above. That would give me the best risk to reward ratio. So this one might just continue to go up and I missed it, and that's just how it goes. But looking next week, if we come back down, bounce again, or intraday reject the 200, that's what I would consider getting long on Merck. Verizon, my gosh, Verizon has really gotten beat up. Look at this straight up move, straight down move. But it's coming into some interesting areas here as well. We're at a 3311 RSI. And what I would be looking for next week on Verizon is a bounce at the 30 RSI, or it goes under the 30 RSI and back over the 30 RSI. That's a really good key level, and that's what I teach in my deep dip buy stock trading approach. We're well below the 200-day moving average, so that's not in play. But as you come back down, you look for those levels. Where am I getting close to a level? You don't see it on the chart, but over here, 33 RSI. So an under 30, over 30, or a bounce at the 30 RSI would make sense. In addition to that, we have this big up bar here. I drew the line that's halfway because from a Fibonacci standpoint, that should offer some kind of support. And ideally, I just measured this level, which is halfway of this bar here, also is going to coincide with the 30 RSI. So there's your confluence and combination of indicators. So just to wrap up, a test of the 30 RSI or a rejection of the 30 RSI and closing back over, especially in context of it being here in the halfway of this bar here, I would definitely consider getting long Verizon. But we do have Verizon earnings on the 25th, so this may be a short-lived trade for me. Last but not least, Exxon. Exxon has really gotten hammered here. Upward sloping orange line is the 300-day moving average. This would be something I would consider if we could close back above the 300. We're below the 300 now, so it's acting as the resistance. So if we got back above it, not too far, but a nice gentle close above the 300, that I would consider getting at, because then I would have the support of the 300 below, and this is a deep dip buy as well. Alternatively, if it continues to go down, we're to 38.11 RSI, just like on Verizon. If we continue to go down from here and under 30, over 30, would be a consideration for me as well. And look, all of these trades could trigger on the same day next week. Am I going to buy all four? No. I will pick the best one on the best day. What is the best one? The one that has the best risk to reward ratio, the one that has the most confluences of entry triggers, confluences and combinations of entry triggers, the one that looks the best on multiple time frames. So, take out a fine-tooth comb, whittle it down to the best one. And again, this is what I teach you to do in my one-on-one course. And that course is in the evening time via Skype. And it's just one-on-one, and that's just you and I. And like I said, I teach you all 5 of the trading approaches that I use step by step. So just a recap on the dailies. CCL, we've come back into the value zone, looking for 2 days of sideways motion and then a V1, V2 trigger. That would be the move on CCL, potentially, if that happens. Merck, if we come back down, retest the 200-day moving average with a good risk to reward ratio, I would consider that one. Verizon VZ, looking for a bounce at the 30 RSI or an under 30 over intraday rejection of the 30 RSI. And then last but not least, Exxon, 2 moves here, potential buy if I close above the 300-day moving average, or alternatively, if we come back down and go under 30 over 30, I would consider that as well. So those are the potential dailies for next week. Let's look at the weeklies. Only a couple. Netflix, 200-week moving average. This would be if we, who knows if we're going to come down here, but if we do come down, bounce at the 200-week, or alternatively go under the 200 and back over the 200, that would give me a good risk to reward ratio at a much more reasonable levels than we are here. You can see we have a lot of topping tails up here. So a move back down, bounce at the 200-week moving average with a good risk to reward ratio, or if it goes under the 200 over 200, I would consider getting long Netflix. And that 200-week moving average is probably going to act as a lot of support. Doesn't mean it's going to have to work the trade, right? But at least gives me something to key off of. And then last but not least on the weekly is Nike. Nike's been quite week. I've talked about this for a couple times. Last week, I almost bought this, but it didn't bounce at the 300 here. So next week, if we come back down, bounce at the 300, giving me a good risk to reward ratio, or alternatively, we go under the 300 and back over the 300, I would also consider that. So real quick recap, Netflix looking for a bounce or an intraday rejection at the 200 week, potentially get long, and Nike bounce at the 300 or intra-week rejection of the 300 as well. And the 300 has acted on a lot of markets really as kind of that bottom lower level. And again, this is called the deep dip buy stock trading approach. This is one of the approaches that I teach in my one-on-one course. I teach 5. I teach the deep dip buy stock trading approach. I teach moving average crossovers. Haven't talked about those for a while. We haven't had a lot. Return to value V1s V2s, which I described earlier. Higher low V1s V2s, which I described earlier, and then double bottom bullish divergences. So those are the 5 that I teach. It takes 15 hours for me to teach you this. One-on-one is the best way to learn anything. Like I said, I am booked up with clients at the moment, but don't let that stop you. Just send me an email, and we can have a chat and schedule something for when I have some openings. But you're going to learn a lot. The course does cost $1,750, but it is a great investment in your trading future. I have been trading for 28 years. I've been through all sorts of markets, and yeah, I know how to trade, and I'm a good teacher. So if you want to learn a new skill, consider just send me an email. Email's in the link of this YouTube video. If you like online courses, I do have a great online course available at udemy.com. The link's in the description. It's very affordable, somewhere between $12 and $15. It's 9.5 hours of video, 26 videos, 15 study guides, and in that course I teach you step by step how to trade the deep dip buy approach. And a lot of the trades that I've shown you on this podcast today are deep dip buy approaches. So obviously the one-on-one course is the better way to go. You learn more and you get more personal attention because it's live. But if you're not in the financial position, if you have $12-15 that you can spare, the deep dip buy stock trading approach on Udemy is a great way to go. If you like today's podcast, I would certainly appreciate it if you could hit the thumbs up button. Really helps out the channel, lets YouTube know there's some valuable content here. And so if you learned anything, you found anything helpful, all I ask for is that you hit the thumbs up button. And then last but not least, if you could please try to go out and do one nice thing for another human being today. It's going to make their day. It's going to make your day. It would make the world a much better place. And in addition to that, if you could also do that for an animal, animals like acts of kindness. I promise you they do. I know this for a fact. And but if we all just went out and did one nice thing for another person today, one nice thing for an animal today, it would make the world a much better place. So I appreciate you being here. I hope you have a really good rest of your weekend. Be careful out there with your trading. Follow your rules, whether you're making money or losing money. Follow your rules. Get back on track. And if there's anything I can help you with, feel free to leave a comment in the comment section. I'll do my best to get back to you. But yeah, God willing, I will see you next week. And have a great week and enjoy the weekend. And on the way out here, I have to run the U.S. legal disclaimer. Thanks so much, everyone. Take care.
U.S. government required disclaimer. Options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.